What exactly is a cash-on-cash return, and how would you calculate it for real estate syndication or commercial real estate? Well, that's what we're going to talk about today. This is Tilda Moschetti of the Altitude Syndication Founders Club talking about cash-on-cash returns. Let's go ahead and go to the whiteboard, and we're going to talk about cash-on-cash. It is a measure of real estate performance, or what you can expect to get out of a real estate investment. And it's equal to the annual pre-tax cash flow and it's divided by the total cash that you put into the investment. So let's use an example. And so yesterday in our rapid implementation call in the club, I gave an example of a property that I underwrote. So this property had a annual pre-tax cash flow per share of an estimated $117 for the first year. Shares sold for $1,000, which means our cash on cash equals 11.7%. Now, why I don't like cash on cash is because it doesn't give a full idea about the whole value of that investment, about what you would get if you held it through the entire period and what you would be expecting to get. It only takes into account 1 year at a time, whereas a more useful measure, in my estimation, is something like IRR, also known as internal rate of return. Because the IRR for this property is equal to 14%. So 14% versus 11.7%, pretty big difference there. Why I bring this up, because this is a remarkable property. 14% IRR isn't bad at all, and certainly for the market and how it was positioned would definitely have investors that would be ready and willing and able and excited about the property to invest in. But what we also did in our rapid implementation call is we were looking at the different levers and how our measures change based on different changes that we make. So how do we get this internal rate of return up to a level where investors are not interested, they're excited about investing? So 14%, I think they'd be pretty excited. 15% definitely, 16, 17. You go over that and you start to have some other issues. I've talked about that in other videos. So getting it up to the 14% mark is what's key. And we do that by looking at how we're doing our financial analysis and what kind of assumptions we're making and adjusting those to something that's very realistic, very defendable, and likely to happen, and basically building out your entire game plan to get that 14% up. So back to cash on cash. This 11.7% was actually way down at something like 7% before. Now it's at 11.7% after we've adjusted it, built our long-term game plan, and this is just for year one. It was a 5-year hold project. Now here's the takeaway from it too, is not only how to calculate cash on cash, but why we were talking about it in our rapid implementation call. Because before commissions, I'm writing this because it's important. Before commissions, the syndicator was going to be making, over that 5-year period, in just one transaction, was going to be making $310,000. If the syndicator decided to take commissions on the purchase of the property, which you would be able to do in this instance, on the sale of the property, just taking half a fee on both the purchase and on the sale, and in this particular instance, they would have been able to do that as well as leasing commissions, the with commission amount equals $601,000. Now, who wouldn't like $601,000 for a little bit of work putting a syndication together, as well as you could do multiple of these. So ideally, we target at least 2 to 4 syndications per year. Imagine what that could do to your account. So again, this is Tilden Muschetti, Altitude Syndication Founders Club. Hope this discussion on cash was helpful. Hope you understand the metric. If you have any questions on how it's done, feel free to reach out to us. Our website is altitude-syndication.com, or reach out to us on Facebook. We are very all over Facebook and LinkedIn, so you can find us there. Send us an email at info@altitude-syndication.com, and we can talk about cash on cash. But more importantly, if you want to talk about how you too can be getting this sort of income, this either $310,000 per transaction or $601,000 per transaction, again, feel free to reach out to us. That's what our club does. We work on real estate syndication and take you from your current position into being a real estate syndicator yourself. Hope that helps. 3, 2, 1, liftoff.